book of the day is Mania by Ivan Boesky. And for those of you that have seen the movie Wall Street or are just familiar with the character Gordon Gekko, Ivan Boesky is actually the character that was based off of. And back in the 80s, Ivan had a lot of success buying and selling companies on the stock exchange and the stock market. Although it ultimately turned out that he was using information that he shouldn't have had access to and was eventually charged with insider trading and lost a lot of his luster in the Wall Street community. But he wrote this book, on arbitrage, which is what his expertise was. And really all that means is, buying something at one price that can sell for a higher price in the future or soon thereafter. And how Ivan made most of his money was betting on the stock market in the form of mergers and acquisitions. So if one company was going to buy another company, Ivan would buy the target, the company that was going to be bought, on the stock market with the hopes that when the deal closed, the company's stock was going to increase. So for example, if the company was being bought at $50 a share, it's usually bought at a premium of what it's actually trading out on the stock market at the time. So if a stock is trading for $40, companies will typically offer more than that. So for example, $50. And by the time the deal closes, that gap will close as well. The stock will trade up to $50. But that assumes the deal is going to a close. So, betting is essentially what you're doing on a lot of these merger and acquisition deals. And I've probably seen it in the stock market too if you follow it. When Elon Musk put in his offer for Twitter, the stock price shot up but didn't quite go to what he was offering at the time, because part of the price that's baked in is the probability that the deal doesn't go through. So, you can invest a lot of money on the hopes that a deal is going to get done, but it doesn't always end up happening as expected. So, Ivan wrote this book on arbitrage and how to use it in the stock market, which is pretty interesting because a lot of, financiers or investors don't always share their methods or practices, at least publicly. And so I thought this book would be a great one to pick up and read, because you get an inside look at, how Ivan's thought process works. And of course, having insider information certainly helps you make these decisions, but there are a few things in here that I thought were super helpful for other people to know. And one of them is what he talks about in the introduction, is when he says, experience indicates that majority control almost always wins, no matter what management tries to do. And obviously he's talking about public companies and how if you're able to control a majority of the shares, you're really able to do whatever you want, regardless of what management or the board of directors wants to do. So you can dictate the terms of the direction of the company and the future deals that they do. And this is an important lesson because, if you're going to start your own business one day or own a business, it's really important to retain control, at least majority control of the business, because that means you get to decide what actually happens to it. And a lot of people will go into partnership agreements, and split things 50-50, but oftentimes that'll create a lot of problems because neither person has the power to decide, if there's a standstill, what's going to happen. So, it's been suggested that if you are going to go into a split partnership like that, one of you take a 51% share of the company. That way, decisions can be made much quicker than if you're at an impasse when you don't disagree on something. And it's important, as an aspect of your business to be in control, because if it's your business, you want to be able to do what you want to do with it. And as soon as you relinquish that 51% control or ownership of your business, a lot of things can go against you. I mean, we've seen it happen in the past with companies. I mean, Steve Jobs was fired from his own company, from Apple, and eventually was rehired and brought back in when Apple had some trouble. But I mean, the man founded Apple, grew it, into a massive company, and was still fired from it. So even the founder of the company isn't protected once they relinquish control. But there are certain ways to protect against that. Mark Zuckerberg famously has a lot more voting shares than he does, or a lot more voting ability than he does shares. So there are ways to combat this, but it's something important to keep in mind. If you do decide to go into business or currently own a business, how important it is to retain ownership of not only your company but also your ideas. And there's a lot of good information in the beginning part of this book. Later on, it gets more into the technical aspects with math breakdowns and examples. But one of the reasons that Ivan likes arbitrage is it's a really sensible investment practice, because if you know with large certainty that you can buy something at one price and sell it for a higher price in another market or at a later time, then you're really reducing your risk, because the risk, if you're investing in something you don't know what direction it's going in, you have a lot more risk than if you know exactly how things are going to happen. And this applies not just to the stock market, but I had a professor back in college who was teaching us different heuristics or ways of thinking about things. And one of the big things that he harped on in our corporate finance class, shout out Professor Griffin, is this idea of information asymmetry, and how when you're going into a business deal with someone, if you're interviewing someone, if you're talking with someone on the street or a family member, both parties have two different sets of information. And this becomes super vital the more impactful your decisions are on a monetary basis or on your life. Because on one end of the spectrum, you have someone, if you're going to buy someone's business, they have all the information on that business, the good things, the bad things, everything else in between. And you only are able to get an outside perspective of what's going on there. So in this sense, arbitrage is more difficult, because you don't have, if you're the buyer, you don't have the kind of information that the seller has. But there are ways to use this arbitrage or information asymmetry to your advantage. And one of those is if you have some sort of unique knowledge that you can share with other people, you have that knowledge inside of your head. And as long as you have it and someone else doesn't, you have information asymmetry in that situation, where it's two different levels of information between the parties, and you can basically arbitrage your knowledge versus what someone else doesn't know, and you can get compensated for that, whether it's being hired for a job because you have an area of expertise that someone else doesn't have, or whether it's selling a product or service because someone else isn't able to make that product themselves or provide that service themselves. So arbitrage isn't just in numbers, but it's also in information, and that's really how the world works, or how business works at the end of the day. It's information arbitrage in a certain sense, because the only reason you would hire a company to do something for you is because you don't have the ability or knowledge to do it yourself, or maybe it's not your area of expertise, or you can be doing something better with your time, energy, and effort. So that's an important thing to keep in mind. And something else that Ivan talks about is really important, because he says, quote, "Technique and knowledge are important, but one must also act decisively, often with imperfect knowledge under extreme pressure, and occasionally one under attack in the throes of a deal." And this is something that I really experienced back in college, and I spent a lot of time in high school as well, looking into the stock market, investing my money, and I spent a lot of time, in the Bloomberg lab at school, researching stocks, and doing my own analysis on them. But at the end of the day, I was never going to have more information than the people that were inside of those companies. But if you have a thesis, if you have an idea of how something might happen or might work in the future, after a certain point, you have to make a decision, and you have to be decisive about what you're going to do. And you really need to get comfortable with the fact that you're never going to have all the information required, or that you would like to have in order to make decisions, whether it's making an investment in the stock market, whether it's buying a product online, whether it's hiring someone, whether it's asking someone out on a date and having a relationship with them. I mean, even in that sense, I've read studies that say it takes 18 months to fully get to know someone. So, for those first 18 months, there's going to be a big mismatch between the information you have about someone and about yourself versus, the information they have about you and vice versa. So, in life, you need to be able to act without having all the information that you would ideally like to have, because you're never going to have it. And this also reminds us that, in the future, data and information is going to become increasingly important in a world where, more and more people are going online and spending time online. The better information you can have, the more powerful you're going to be, and the more you're going to succeed, not only, in business or in your careers, but, also in your personal lives, because if you can understand, more about someone or know more about someone, you're going to be able to have more positive interactions with them, not only because you'll know more about their backgrounds and where they come from, but, you'll also know what they like, what they don't like, and you'll be able to avoid confrontations by, really taking the time to get to know people and, using that information to benefit everyone involved. So I hope you liked today's book of the day by Ivan Boesky, Merger Mania. Didn't spend all the time talking about mergers and acquisitions, but the idea of information arbitrage is very important, and hope you enjoyed it, and I'll be back again tomorrow with another book of the day. Thank you.